Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Tuesday, December 6th, the year of our Lord 2022. And it is Crypto Tuesday. So I wanted to welcome you to Crypto Tuesday. We're going to talk about the IRS and crypto. It's coming to the end of the year. People want to know about this lost harvesting in the IRS. That's what we're going to talk about today. Won't you join us? Yes, it is Crypto Tuesday. Lots of news about the crypto lately, not just the downside. Although, again, I keep saying that it's faded. Oh, I forgot to put that on there. So maybe I should do that. Generally, we start Crypto Tuesday with coinflip.tech and what's going on with the market. So I forgot to bring it up. So let me just do that quickly. I hope I can do it quickly. And we'll look at the markets because I like to do that. Okay, so let's go to the tail of the tape. We could do that now. Yeah. Okay, here we go. So here's the crypto markets. It ends the day right where it begins, doesn't it? And again, Bitcoin and Ethereum are right there together, like a mirror image of each other. A little bit different, right? Looks like Ethereum got a little over and then came right back down, but they both have a negative 0.02, so about where they started the day. Let's look at the last 7 days for Bitcoin. And it's up it's up to 17. Again, a very, very narrow range now, isn't it? Not what it was. Let's see Ethereum now. Probably very similar, I would guess. Yes, it is similar. So there we are. There's the markets. But the story here is the IRS is coming for crypto, but it's complicated. When everybody was making money in crypto, right? The IRS was coming after everybody, and they're starting to really gear up the regulation, and we talk a lot on this show about the SEC and the commodities exchange, futures exchange, and and the battle that goes on there about who's going to take control, who's going to rule the roost, as it were. But now that the prices are coming down, now they're worried about Now they're worried about people taking losses, and so that's kind of where we are. So let's. This is a very good article by Emily Peck. I'm not familiar with her, but this is a very good article of hers. The world of crypto is a new frontier for a host of government agencies, and the IRS is no exception. Why it matters, though changes are happening slowly, the agency is trying to make sure that Americans who dabble in digital assets pay their fair share of taxes, while other regulators grapple with the more existential questions of crypto's place in our financial system. A new law is scheduled to go into effect in 2023 that will make tax filing for investors a bit easier. A cut down on scofflaws. Exchanges and brokerages will be required to report customer information directly to the IRS and to investors themselves, as now happens with stock transactions. Experts say it could get postponed, but it'll happen at some point. Until then, most investors rely on software like CoinTracker and CoinLedger to track investments. Now, I have to say, we do tax returns for people who have crypto. Generally, I have used both. Generally, we're a crypto ledger. I found it easier. But they're very similar. I'm not endorsing any one of them. I'm just telling you who we've used most, and that's CoinLedger. The ongoing crypto winter may have reduced the number of folks with taxable gains this year, but the volatility can complicate the tracking of net gains and losses for tax purposes. especially for those who trade actively. The agency wrapped up enforcement efforts last year and has subpoenaed some exchanges, including Kraken and Circle, seeking customer information this year. Remember, Remember that the IRS did subpoena records from the Kraken and Circle and others in a what they call a John Doe subpoena, where they don't know who they're looking for. They're just looking for anybody who hasn't reported, and so they get a list of everybody who's on the exchange, and then they can compare it to their list on their who filed taxes and see what if they match. And so now it's very, it's always been difficult, but now with this tactic, hard to hide any crypto, that you've been buying or selling. There's a task force within the agency devoted to this. Anyone who thinks that they can get away with not reporting their crypto are fooling themselves. The IRS is also still trying to update its tax forms to capture all the rapidly evolving digital assets that Americans just may owe taxes on. This year, for the third time, it changed the language on the front page of the common tax form, the 1040. It now asks taxpayers if they've traded, bought, or sold any digital assets. Remember, the last couple of years it's been virtual currency, but now it's digital assets. In the past year, whereas the 2021 form uses, that's what I just said. I think they're trying to make sure NFTs and the like are covered. Every tax filer must answer yes or no, so there's no excuse of I had no idea if you don't pay up. I guess there was always that excuse, since if you don't fill out your own tax return, you say, I didn't know. Of course, you sign under penalty of perjury, so it's implied that you do know and that you've signed it off under penalty of perjury. And that's why it's always best to look at your tax return. What if I don't understand it? Then ask questions, right? If you don't understand something, ask your tax preparer. What does this mean? Where did this number come from? I've had many clients who did not look at their tax return, only to be questioned by the IRS about some entries that they had no idea were on there. Some investors have assets locked up in FTX or other bankrupt crypto companies. This is interesting. They won't be able to write off the potential losses on their taxes until the bankruptcy process is over, and that could take years. The bottom line, tax season for all kinds of investors might hurt a little more than usual this year. Digital assets are no exception. I just thought that was an interesting story. So here's another story. Cryptocurrency investor losses are being turned into IRS gains. Here's how they're doing it. Bitcoin's value is off more than 60% year to date. The Internal Revenue Service has been turning up its scrutiny on cryptocurrency investors in recent years. As that happens, more investors have been turning to the tax code's rules on investment losses. That's according to a study released this week that shines a light on link between IRS enforcement and tax loss harvesting. The latter is a tax planning strategy many crypto investors will have to consider after 2022's tumble for Bitcoin, Ethereum, and other digital assets, not to mention the implosion of cryptocurrency exchange FTX. Within the past decade, the IRS and other tax agencies around the world have been increasingly focused on ensuring crypto investors fully report and pay taxes on their gains. The IRS has previously sent cautionary letters to crypto traders and sued cryptocurrency exchanges in this compliance campaign. More cryptocurrency investors are paying attention, according to the study released on Monday. Researchers at C.S. Johnson College of Business at Cornell University, Cornell's FinTech Initiative, and the University of North Carolina's Business School poured through the range of information, including anonymized data about 500 large retail cryptocurrency traders. Roughly one-fourth were U.S.-based taxpayers. Compared to international peers, domestic traders increased tax loss harvesting by approximately 8% on average, following the increase in tax scrutiny, the researcher said. Domestic traders sell more losing positions than international peers at the end of the year, they later added. The same pattern of increased tax loss harvesting played out when researchers looked at billions of trades from more than 30 cryptocurrency exchanges. Of course, tax loss harvesting is a long-established planning strategy when it comes to stocks, bonds, and other conventional investments. It typically comes into focus at the end of the year, especially for the bruising year like 2022. In a nutshell, taxpayers gather their investment losses and use the losses to offset capital gains and or carry forward the losses so they can be applied to future gains. Researchers are focusing on crypto tax loss harvesting because they see it as a gauge of overall tax reporting. A crypto investor's decision to make use of tax loss harvesting as a tax planning strategy by necessity implies a degree of tax compliance in that the investor must report crypto trading to the tax authority to take advantage of the strategy. When investors with traditional assets like stocks sell at a loss, they need to be aware of the IRS wash sale rule that cancels a capital loss if the person buys a substantially identical investment 30 days before or after the sale. For now, there's no wash sale rule when it comes to crypto. This is very important, and that spurs wash trading. The researchers noted a scenario where crypto investors can have their cake and eat it too by notching a tax advantage and maintaining market exposure. Exchanges with presence in or are regulated by the United States exhibit a greater amount of wash trading than international peers following increases in tax scrutiny, and the effects are more pronounced during market turndowns and year ends. Well, that's because that's where there'll be a loss. Right? A crypto winter of 2022 has been cold. Bitcoin is down more than 60% year to date, and Ethereum is off more than 65% over the same period. By comparison, the Dow Jones is off 6.5%, and S&P is negative 1.44%. Has declined 16% year to date. The latest research is looking at what happens in the wake of IRS scrutiny, but this could be the tip of the iceberg. The IRS is coming into $80 billion over the next decade for increased enforcement against high earners and corporations. Against everybody. Don't fool yourself. And plus more money for customer service and operations. That's just a joke. At the same time, new IRS reporting rules for digital asset brokers, a result of last year's infrastructure bill, are scheduled to take effect next year. There's going to be lots of losses out there this year, and it's likely there will be more in following years as oversight increases. There's just bound to be more rules coming out to fill out all the gray areas, he said, and there are lots of gray areas. Interesting story. So again, that's one. When crypto's going up, of course, the IRS wants to know if you're making money, and the way that they've structured this, in that crypto is property, and so there are no wash sale rules as it applies to stock. And so it's very important so what does that mean? That means that if you bought at, let's say you bought at 40 and now it's at 20, because I want to keep the math easy. Well, I've got a loss of $20 per coin. Or, if you're not talking about Bitcoin, but let's say a coin, I bought it for 40. Now it's worth 20. If I sell it now, I'll take a $20 loss. But I can, the next day, because there's no wash sale rule, I can buy back that coin at $20. So I take a $20 loss. I still own the coin, and I get a $20 loss capital to offset some taxes on any capital gains, or as they say, carry it forward. Very important. Very important. So that's where we are. So that's where we are today. So thanks so much for watching. I think those were very good stories. Glad that you can, especially towards the end of the year. So remember, I'm going to ask you to like, share, and subscribe. We need your help to get this information out, and only you can do that. So like, share, and subscribe. We thank you so much. Remember, if you're fighting the IRS, if you have IRS problems, if you have unfiled tax returns, if you owe the IRS money and you don't know what to do, the first thing you should do is get a copy of my book, Deal with Your IRS Problems Today. Go to freeirsbook.com, freeirsbook.com. Get your free copy. I will pay for the printing. I'm going to ask you to pay for the shipping and handling. Very small fee, and there's lots of bonuses. See it at freeirsbook.com. So thanks so much for joining us. We'll be back here tomorrow. Thanks, and God bless, and we'll see you back here tomorrow. Out.